Warren Buffett of India has quite an interesting journey. Born on 5th July 1950 in Mumbai, the boy was interested in the stock market from a young age. The little boy approached his father one day and asked him, "Why does the stock market move?" Little did his father know that the answer given by him would take the boy through a path of wealth and greatness. His father answered, "The market moves because of news." Simple but true. The boy grew up and graduated from Sydenham College in 1985 as a chartered accountant, and his interest in the stock market was evident. His father gave his blessings to enter the world of investing, but put forth one condition. He said he wouldn't fund his venture, and neither would any of his friends. He had to find his capital all on his own. The story of this young man turns interesting. He entered the stock market with just 5,000 rupees in 1985. At that time, the Sensex was trading at 150 points. Within a few days, he received a capital of 2.5 lakhs from his brother's client. He promised the client that he would provide better returns than the fixed deposit. He made his first profit of rupees 5 lakh. He bought 5,000 shares of Tata Tea, which was trading at 43 rupees. Luck in market favored the boy, as within 3 months, the shares were being traded at 143 rupees, resulting in him earning thrice the profit. From 1985 to 1986, he made profits worth rupees 25 lakhs. This was a huge sum at that time. The next big move made by this eccentric man was in Sasagoa, now known as Vedanta. He bought the shares for 28 rupees. The stocks went up to 35 in a few days and soon touched 65 rupees. This move resulted in profits in his portfolio. Subsequently, in 2003, he bought Titan for rupees 3 and it is currently trading at rupees 850. He owns 7.5 crores shares, which are equivalent to 8.45% of the company. Patience is the key, something he strongly believes in. He is therefore rightly called the Big Bull of India. Similarly, in 2006, he bought Lupin for rupees 150, which is now trading at rupees 850. He bought these high-performing stocks at a very early age and has held on to it. In December 2011, he faced an enormous loss, wiping out 30% of his entire portfolio. He could have sold his shares as many panic-stricken investors do, but he is different. He held on to his stocks as he believed in his portfolio. Within 2 months, in February 2012, he recovered all of his losses. Can you guess who we're talking about? Yes, we're talking about Rakesh Jhunjhunwala. From rags to riches, from rupees 5,000 to rupees 15,000 crores within 35 years. He owns an asset management company, Rare, named after himself Rakesh, and his wife Rekha Jhunjhunwala. He is on the boards of multiple Indian companies like Paribas Financial Services, Concord Biotech, Hungama Digital Media Entertainment Private Limited. His philosophy and knowledge of the stock market has made many of his investors wealthy. He has pledged rupees 5,000 crores, which is 25% of his net worth, towards philanthropy. When asked about this sudden move, Jhunjhunwala replied that his father had inculcated good values in him, and giving to society is just one of them.